We're sitting at 672 to the US dollar. We have seen fantastic movements on the local currency, a combination of factors. What is going to push us even further, even stronger from these levels? Many guys out there are saying 655 is something that could be a reality in the coming weeks.
Well, we've certainly seen a lot of movement around those technical levels we discussed last week. That big technical level just sub the 680, that 678 is quite a big level, and then 672 on the downside really opens up 655 because that was the previous low that we saw in December last year. So that's why the market's talking about the 655 level. Right now, markets are being driven on the currency front purely from an interest rate outlook. So you're seeing currencies like the euro that are strengthening despite the fundamentals purely because there's an interest rate decision that's coming in on Thursday, and in fact 57 out of the economists that were interviewed by Bloomberg's in fact said that they think it's going to be a hike. So the market's pricing in that hike already. We're looking for the outlook, one of whether or not we will in fact see a hike, but even if we don't, what the hawkishness of the outlook for the ECB looks like, and what the implications are for South Africa.
Well, Brigid, I mean, it's fascinating. It seems that it is done and dusted that we will see an interest rate hike, but some say if it's around 25 basis points and it's maintained at that level for the months to come, it's not really going to have a significant impact on inflation or on the growth rates as well. Just perhaps a vote of confidence from the ECB saying we are targeting inflation and we are being prudent. Do you think that's the message that we could be seeing?
Well, you must remember in the Eurozone, the interesting thing with that dynamic is that you've got a whole bunch of economies that sit in a zone that are managed differently. So from the perspective of more powerful economies like those of Germany and France will benefit from the fact that inflation is being targeted, whereas they have that bailout package that looks out for those weaker regions, being the likes of Ireland, Portugal and Greece, that they will be able to maintain the interest rates that they are having to pay back their bailout packages at. So there's a better and a more moderate way of managing that monetary policy, whereas with the likes of the United States, it is a blanket monetary policy that impacts all 52 states.
It's also quite fascinating. We've got BOE, we've got ECB, we've got Royal Bank of Australia, we've got the BOJ as well. So it's definitely monetary policy week. How do you play all these currencies, given the fact that we are going to get not so much interest rate decisions from most of them, but rhetoric about growth, future prospects, intervention on the currency front as well? Where are you putting your money right now?
Well, right now we're looking at the US and Japan remaining as the funding currency, so those are likely to remain relatively weak for the foreseeable future. It was specifically because the interest rates are so low, and they're likely to remain as such for the time being. Specifically in Japan, you can see the weakening of that currency on the back of a replay of the carry trade again. You've seen Brazil, you've seen South Africa, and you've seen other commodity-based emerging markets with a high yield benefiting. But now that we're going to have a potential interest rate hike out of the Eurozone, we potentially could see some form of an erosion on those emerging markets.
It's quite fascinating. Some of the emerging markets are coming under pressure when it comes to inflation. They're experiencing it. Australia is a commodity producing country and it's got that commodity link. It's strengthening as well, and it seems to have contained inflation quite nicely. We're sitting at a cash rate of around 4.75%. When you look at the Australian scenario, what has actually put them in good stead? Is it because they anticipated inflation and hiked interest rates when everyone was raising their eyebrows when they did that?
I think so, and I think that they had strong fundamentals that they placed well. They're sitting in very close to the Asian zone, which has shown that amazing growth that we've seen over the last year. Whereas, you know, if you even look at South Africa with regards to our monetary policy, we also remain within that target band. And I think that that's been something that from a global perspective has been well absorbed, and certainly is something that people are keeping their eyes on our currency and our country from that perspective as a good investment opportunity. Obviously, what you then do see is the swing in the currency, but that's really been driven by the fact that there is still value in South African bonds and South African equities.
So tell me this, Brigid, 672 is where we're at around there. How much longer can we sustain this one? When you're talking about the carry trade being resumed as well, we're starting to see the Japanese yen coming under slight pressure. We've got the euro dollar sitting at 142, well above that in fact. How much longer can we see rand strength for? What is going to push us higher? Well, stronger?
I think that there's a couple of risks in the system, one being the fact that a lot of foreigners have been involved in our markets, whether or not they have to continue their appetite within South Africa as the bond markets rallied. If we start seeing a sell-off, we potentially could see rand weakness, so that's the first flag to look out for. And the second thing is, I think, looking at the comments that are coming out of the likes of the Fed, out of the ECB, out of the BOE, what are their concerns around hawkishness, what is their inflationary concerns, and what does that outlook look like for the rest of the year with regards to interest rate hikes, because that then diminishes our value. And also what South Africa has to say, specifically from the South African Reserve Bank, with regards to our outlook on inflation. And I don't think there's been enough clarity around that. There needs to be a little bit more clarity in terms of how dire does this inflation outlook look, and are we in fact starting to be in a position to start pricing in more aggressive interest rate hikes.
How significant is the speech by Ben Bernanke later on today? We also know Lockhart is speaking. This follows hot on the heels of many central bankers coming out with extremely hawkish comments last week. Do you think that the rand could respond to any kind of signal from Ben Bernanke that we could see an end to QE2, and perhaps that rate hikes are far closer than one had initially expected?
I think so. I think that's exactly what the market's waiting for. The big move that we saw recently out of the US was the fact that they then did say that the next round of QE is unlikely. So after June, when this QE2 comes to an end, it's unlikely that they're going to pump more money into the system. What their inflation outlook looks like, based on the fact that they are starting to see job creation, they are starting to see some form of growth coming into that system, what the outlook for them seems to be will be interesting for the market in an environment where more and more economies are starting to appear to come online, and obviously the interest rate environment is definitely on an upward trajectory.